At this time, we would like to reset the stage, and I would like to introduce a special live conversation with Mr. Henry Fernandez, Chairman and CEO of MSCI, and Dr. Jeon Kwang-woo, Chairman of the Institute for Global Economics. In addition to his distinguished career in private equity and formerly as a diplomat, Mr. Fernandez has been an avid supporter of the Institute for Global Economics, and we are delighted to hear from him this morning. At this time, Dr. Jeon, I would like to invite you to begin today's special dialogue with Mr. Henry Fernandez.
We ask for your understanding. We are making technical arrangements, and speaking while wearing a face mask may decrease the quality of sound, so I would like to take off my mask for better sound quality, so I ask for your understanding on that.
Do you hear me? Yeah, are you there? Can you hear me fine? Or
yes, I hear you a little faintly, but I hear you.
Oh, okay. Is that the sound is fine? We had trouble earlier on when we had a test before this conference started. Is that okay now? I would like to make sure that everything is fine now, communication.
Yes, I can hear you as long as you speak loudly.
Okay. All right. Thank you. Thank you very much for being with us today. It's a very late hour in New York. I appreciate your support very much. The only regret is that we're hoping to have you in person this time, but we'll reserve that for our next event.
Yeah, as I mentioned to you, I promised to be with you in November of this year.
Yeah.
And I would like to thank you for the invitation to be here today and the opportunity to be part of this fabulous conference that is co-organized by the Institute and also by POSCO. I'd like to congratulate you and the chairman of POSCO because it is in events like this that the issues get discussed in an open and constructive forum, and hopefully we can find solutions to many of the issues that we face, and that we can execute on them for better prosperity of our societies.
Okay, thank you very much. Henry, I have broadly three areas of issues that I would like to talk to you today. But before I do that, I think it is appropriate for me to say something about you and MSCI so that our audience can have better understanding of what sort of background and main business that you carry on, so that it could serve as useful background information. So let me read what we have here. Actually, your bio is in 2 pages. It's a very long bio. Ladies and gentlemen, let me briefly introduce Henry Fernandez, who doesn't really need much introduction, but to give you a sense about what he does most of the time. As MSCI's Chairman and CEO, Henry Fernandez has led a firm for over 2 decades. So he's been CEO for a long time. As a premier provider of indexes and portfolio construction and risk management tools, as well as, important thing here is, as well as ESG, environmental, social, governance, data, and research. That's where MSCI plays a leadership role in the world. MSCI is an S&P 500 company listed on New York Stock Exchange. Well, Mr. Fernandez, Henry was one of 30 CEOs named in Barron's list of world best CEOs. Congratulations to you, and our audience will appreciate your presence today. Now, given the time constraint, I would like to move on rather fast because we were kind of behind the schedule a little bit. And also, I have to let you go to bed as soon as possible. So let me go on. I would like to start with the current situation about global economy and finance before we move on to the main theme, which is ESG. Now, with this 75 basis point hike, interest rate, benchmark rate hike by the Fed the other day, now, do you see this recession, is it pretty much inevitable anytime soon this year or next? Or what is your sense about the overall economic situation and prospect through next year or two?
Well, first of all, I will say that the global economy is facing significant challenges. We are likely to see a significant slowdown in China. We're likely to see not only a slowdown, potentially a recession in Japan, given the high energy prices and high food prices. As you know, they import a lot of their food. It is difficult to imagine that Europe will not slow down at a minimum or potentially fall into recession. Confidence levels in Europe at the consumer, investor, and corporate sectors are declining fast. And in the US, for different reasons, the economy was overheated by too much fiscal policy and obviously a relatively easy monetary policy in the last 2 years. So, Larry Summers, the famous, Harvard economist, has said that since the 1950s, every time that inflation has been above 4% and unemployment has been below 5%, the US economy has always gone into a recession in the following 2 years. Now, we are at 8.6% inflation rather than 4%, and we are at 3.6% unemployment, so rather than 5%. So it will take a lot of monetary tightening and fiscal restraint to avoid a recession. Obviously, there are a lot of other factors going on, but I will say the probability of a recession in the US, in my opinion, is higher than 50%.
You mean this year?
Well, it will probably be, most likely next year. We are already seeing confidence levels coming down, consumer confidence levels, consumer spending has come down a bit. Obviously, inflation continues to be high and persistent, and the Fed is committed to fighting it. Contrary to that, to the UK, in the UK, the monetary authorities can say that their aim is to throw the economy into a recession. Politically, in America, it's very hard for the Fed to say that, but that's their intent. In order to slow down demand and reduce, significantly the pace of economic activity. If they wait too long, which they already did, inflationary expectations get built into every part of the economy, and it becomes even harder to eradicate inflation. I will say the silver lining is that the financial markets, especially the treasury bond market, is not yet predicting a continuation of high inflation beyond 2 or 3 years. When you look at the Treasury, the 30-year bond rate, the 10-year bond rate, they are, in the 3+, 3.5%, category, and therefore, if inflation were to be believed to be 4 or 4.5% over the longer term, those bonds will not be trading at those levels. So that's the silver lining at this point, but we have a lot to go before we get there.
Yeah. Okay, Henry, I think we should move on to ESG issues. That's the main theme of this conference and for our conversation. Now, in your view, what are the most important recent developments in the area of ESG management and investment? Lately, a lot of debates going on about whether or not climate crisis have been overstated, or greenwashing problem has also attracted attention. So all things considered, what would be the most important significant developments in this area of ESG management?
So first of all, I would say that we are in a process of redefining capitalism, improving capitalism in a more inclusive way, in a way that incorporates all externalities into the pricing of assets and into the capital allocation of society. And these events happen only every few decades, every generation, every 2 generations. And we are in that process with respect to ESG, for example, but in other aspects, the geopolitical system, the international economic order, the nature of globalization, and so on and so forth. So I think we're likely to see major changes. Now, with respect to climate, we clearly are in a historic existential threat to the planet. That is not going to be decades or a large number of decades. It's only be a few decades that we have to confront this problem. So in a situation like that, there will be a huge balancing act between the forces that take you in one direction and the forces that take you in the opposite direction. So when you look at ESG itself, it took off significantly in investing and in companies in the last 2-3 years. And there is a little bit of a backlash right now because many of the ESG investments that were made are being accused of greenwashed investments. Many companies that have touted themselves as green are being accused of greenwashing as well. So, for sure, there are elements of that happening. And for sure, the regulators are looking into that in Europe with DWS, in America with Goldman Sachs Asset Management. And therefore, they're looking for understanding the disclosures, understanding the claims that are being made, and whether those are followed through in the investments that they sell to investors. So there will be a pendulum switch there, and there will be a lot of good things that come out of that, especially disclosures of what constitutes a particular type of ESG investing. And that's good because that is the nature of progress. It goes in reaction and counter-reaction and reaction and counter-reaction, in order to get the right center move. In climate, obviously, because of the increases in fossil fuels, because of the lack of energy security by Europe and its dependence on Russian oil and gas, and the rapid increase in food prices and all of that, we are in an energy crisis right now. This energy crisis came to Europe recently, but obviously it was big in Asia last year with coal prices going through high prices. So now we have an energy crisis both in Asia and in Europe, and maybe not a crisis of supplies in America, but for sure a crisis of prices that create incredible political reaction because it affects the pocketbook of so many consumers. So that process is going to create, and logically so, a reaction that more investments will go into fossil fuels. There will be more encouragement to use highly polluting energy, and because there's no alternative. In the very short term, people have to eat, they have to move around to different places, they have to heat and cool their homes, factories need to operate, and so on and so forth. Having said that, though, I think that a lot of what is happening right now is sowing the seeds of significant progress, because you already are seeing that, in countries like Germany, for example, and Germany and Italy and other countries like that, they began to put in place, in the US, the UK as well, more ambitious decarbonization and clean energy targets and investments. Belgium has expanded the life of 2 nuclear reactors for another decade or so. Finland has opened up the first new nuclear facility since 2007 in Europe. The demand for electric vehicles in the US, in the UK, in Australia, and elsewhere is significant. If you want to get an electric vehicle in the US, there is a long waiting list and the like. So I think that all of that, is going to bode well for, even though in the short term, there is going to be significantly more pollution, it's going to bode well for an impetus for cleaner energy and less carbonization in the world. But as I said, it's a big balancing act. At the end of the day, every society in the world needs to balance out economic growth, energy security, and environmental sustainability. This is what I call the 3 E's. And it's never going to be a straight line. It's going to oscillate into more energy, fossil fuel consumption rather than less, maybe more environmental degradation, maybe less economic growth sometimes, and so on and so forth. But it is a huge process that the world has to go through. The last thing that I would say is that this process is clearly a major, major opportunity. Everyone sees this energy transition to a low-carbon society as a big problem, which in fact it is. But it is one of the biggest commercial opportunity of our lifetime, and potentially many, many lifetimes. Therefore, I encourage the Republic of Korea. You have always been a leader in a lot of what you do. I encourage you to embrace this change in ESG, embrace this change in the transition to a low-carbon society, and become one of the big winners among countries in the world in that transition.
Thank you, Henry. That's great. If I quickly rephrase what you said, is even though we have to have short-term cost for green transition, and but in the end, at the end of the day, we'll have more robust, stronger ESG principles contributing to a better world for our future generations. Now, that in the process we'll may have to go through this resetting ESG principles and procedures, and some sort of adjustment as for pacemaking, in good order, speed, good combination of various energy sources and so forth. So is that a fair?
Definitely feedback? A fair. And now the important thing to remember, JK, is that ESG is not a fad. It's not a temporary process. ESG in economic terms is a very simple concept, which is there are externalities that a free market system creates in discrimination, lack of working environment, in pollution, in governance. We'll talk about governance in a minute, and other aspects. And those externalities are not priced into the securities, into the assets in a country, and therefore they are not properly allocated. Capital is not properly allocated optimally, and therefore we are in an interdependent world, interconnected, in which everyone finds out what the other company is doing or the other country is doing relatively quickly. So societies are becoming extremely intolerant of the mispricing of these externalities and the misalignment of that capital allocation, meaning their savings are being misallocated and therefore creating less economic growth than they would otherwise be able to create.
Well, just a quick final question on ESG. As the world's leading rating institution for ESG, have you changed any sort of guidelines or anything in the process of the latest market turmoil, energy prices increases, and all those challenges at the moment? And was there any material change in your rating system or process?
Well, the ESG, the same way that I describe it as a very large balancing act, ESG is also very dynamic, very dynamic. A lot of it has to do with the preferences of citizens in a society. If you have a political system in which the citizens are extremely intolerant of certain matters, that's going to be very high on the agenda of ESG. If it's a low tolerance, then it may have a different weight. But therefore, that dynamic process that we follow is, we do that every year. Every year we do a consultation with investors around the world about what becomes more important in ESG as time goes by, and we make adjustments to our methodology of ratings with those improvements that we make. So, for example, one consultation that we're going to be holding later on this year is, ESG has a component that is climate, but there are other components, governance and social issues. There are other environmental issues. So the question is, what should the weight be of climate in a particular company and in a particular industry? Should we be assigning a very large weight? And if so, that swamps the governance and social issues and other environmental issues, or should we not? So that's an example of that process. So we are constantly improving the methodology because this is a very dynamic field, and therefore that leads to changes in the ratings of companies and industries.
Thank you. Thank you. That clarifies pretty much. Time is running out, so I would like to finish up with two parts, two notes, if you like. One has to do with our co-organizer of this event, POSCO Holdings. They have changed its governance to holding company structure. The aim is to promote more eco-friendly business sectors within the group. So have better portfolio, business portfolio structure for eventually for higher shareholder value. Now, in other words, they changed the G to promote E and S factors in a more efficient way. Does that make sense to you?
Well, first of all, we applaud and commend the leadership of POSCO, the board of directors of POSCO, to take such a significant action in the direction of the future. We like what we have been seeing from them with respect to the holding company structure, so that they can invest in the energy transition in the areas of battery materials and lithium and nickel and obviously hydrogen. But also importantly, the governance in the strengthening of the ESG committee of the board of the holding company, and the creation of ESG committees at the POSCO steel company level, and the independent directors that they're looking to put in these positions. Also the ESG council that is being headed by the CEO of the holding company with the CEOs of the subsidiaries. All of that is definitely a step in the right direction. So congratulations on that. I think the two other aspects of it, clearly the investments in some of these areas that will provide the energy transitions are going to be should be very profitable investments and should create great returns for the shareholders. We also would like to see out of these ESG committees of the board and the ESG council more and more transparency at the steel company level of the carbonization metrics that they are creating, because obviously steel is one of the most highly carbonizing activities in the world, and what are the remedies that they're using, what are the steps that they're taking to decarbonize. Transparency is important. Nobody really is expecting that they're going to solve the problem, especially overnight. But I think what the world is expecting is a great deal of transparency. So I hope that this governance structure that is being created also leads to much higher levels of transparency and disclosure about the steps that they're taking. So congratulations.
Okay, thank you for your encouraging comments. The final question, very quick one. Now, excuse me. Now, MSCI has become a household name during our presidential election because the point that was raised during the debate was that when can Korea join MSCI's developed market index? Now, as you may remember, Henry, I started 14 years ago when I was the FSC chairman, when we had first encounter. And we are still working on this issue. So you tell me in 30 seconds, what do you expect?
Yeah, so
how Korea should do, and when that timing will come in your best judgment?
Well, first of all, as an admirer of Korea and the Korean people, there will be no more satisfaction to me. It will be a great honor to see Korea be part of the developed market indices of MSCI. Is the kind of place that you should be in. The decision to get there is actually not ours. The decision is the Korean government. Right, sure. There are three areas, and by the way, these are not demands of MSCI. We're an intermediary. These are needs and conditions of the investors around the world of the Korean system. So the three areas that need significant improvement are the full convertibility of the Korean won especially the trading of the Korean won. Right now, the trading is limited to 6 hours or so during the day in Korea with Korean institutions. So any investor that wants to rebalance its portfolios is extremely handicapped by that. So at a minimum, the extension of hours of trading, which I know that has been announced, that will be helpful. But secondly, the trading of the Korean won in the spot markets, in the financial centers of the world, will be very important. The second area is the Korean system of identifying, investors is extremely rigid, and it creates significant operational issues for investors in creating in-kind transfers of shares and off-exchange trading. That needs to be addressed. Third, the Korean exchange has limited the permissioning of the Korean stock market data for the creation of investment and derivative instruments that can trade around the world. So what I can tell you is that there is no other developed market in the world that has these restrictions. And there is only 3 or 4 of all the emerging markets that MSCI follows that have these restrictions. So we're not only talking about an exception in the developed market, we're also talking about that the policies that you have are an exception. That they are in the total minority in the emerging markets of the world. So I would encourage the new administration to take a look at this. We will be more than happy to work with the new administration to try to figure out a way that a lot of these policies can be adapted and can be changed in order to have Korea be in this place in the developed markets of the MSCI indices.
Excellent. Thank you very much, Henry, for your long time, more than 30 minutes, late hour in New York, and your insight, very informative stories that you shared with us. On behalf of our audience, I would like to thank you very much. Wish you all the best, and I'll see you in November.
Well, thank you for having me, and also thank you for your friendship of more than 14 years.
Okay. Thank you. Thank you.